Hey, good morning, guys. This is Simon with Trade and Perform Coaching, going over the trade review for Thursday, the 27th of February. And man, it was a pretty spectacular day market-wise. At the end of the day, you could look at it and go, well, it was straight up. So let's take the things that were into consideration that went into the day. Both for myself, I want to look at it, and I'll look at it at the end from a coaching standpoint, but also from the day's preparation. Okay, so the first thing you had to know was that we had a ton of Fed speakers on the docket, including Janet Yellen. The last time Yellen spoke, about 9 a.m., the market pretty much went vertical, and it caused a lot of damage to a lot of traders. So um, keeping that in mind, uh, you had two choices to make. You were either going to trade knowing that the Fed speaker was speaking and that the market could just blast up directionally or down directionally, and you could get stopped, and you are all right with that, and you chose to trade. Or you said, I'm not all right with that, and I'm simply not willing to take the risk in that environment, and I'm not going to trade. That's point number one. Whichever way you decided, you should have just stuck with it, because not making that decision ahead of time creates indecision, anxiety, and fear in your trading. It makes it very, very hard to stay consistent. Decision number two that needed to be made was that in light of the random news, right, is it okay for you to trade contra, right? Considering that last time she spoke, she drove the market straight up. Now, I remember quite clearly the last time she spoke, I completely underestimated her impact on the market. It was a huge straight up day. Zones got busted, and I wasn't particularly in the mood to counter trade that market. That was a decision I was going to make. Third of all, for those who were trying to get on the meeting, if you'll recall, I was having massive technical issues in the morning. And at that point, I simply decided that between Yellen speaking and my technical issues, that I was going to put my hands in my pocket and kind of observe the day, help my coaching clients through the course of the day, but that I wasn't going to trade myself because I already knew out of the gate that I was not balanced. And there was probably emotionally, I was upset about the technical issues, and there was probably little chance that I was going to get back to where I'd normally like to be, meaning calm, in a calm meditative state when the market opens. And I know that I have a good chance of losing money. And I always follow this philosophy. No one day matters. No one trade matters. Okay. And so no matter how much the market was going to go up or how clear it was that I was going to see it and be able to make money, inevitably, if you're emotionally upset, it becomes very difficult for the majority of traders to execute properly. That's been my experience, both personally and in coaching others. And I'm mature enough and I'm confident enough, both in the zones that I have and in the way that I execute those zones, that basically I can take a step away from any one day and come back the following day and know that I'll make money. I'm extremely confident in that. And that makes all the difference in letting me make good decisions day after day. So let's go into the day real quick. First of all, we had opened up, our Globex low had actually been down here near this open gap of 1832, and we had traded up quite a bit, actually 10 points by the time we got into the open. And obviously that was on the back of Yellen about to speak. So that should have created two thoughts for you. First of all, we wanted to figure out what's the chance of us getting a retest the Globex lows. And secondly, the zone right below it, which accounted for Tuesday's lows and, Wednesday's lows. I mislabeled this. Wednesday's lows and Monday and Tuesday's lows. This whole area was obviously key to get below if we were going to have any downside. Obviously, we opened and we ran. First time into the white zone, right? We found rejection out of that white zone for a trip back down to Tuesday's lows. Now, knowing that Janet Yellen was speaking, one could have simply said, I'm not taking the short side of the trade till I see us break below at least Tuesday's lows and just work the long side of the trade. If that were the case, right, you had several choices. First, you could have taken the first dip or open here, first dip into, right, this purple zone, this 1840 to 1837. Obviously, you took relatively little heat. It didn't even go to the back of the zone. And you had fantastic trade location. And if your theory was right? That when Yellen speaks, we're going to get upside moves. That would have been your place to obviously buy and hold or leave trailers for the balance of the day. Certainly, you captured your 2 points quite easily. Now, most of my coaching clients traded it both ways. They took shorts out of the white zone and longs out of the zones as they were appropriate. So most of my guys had a long here, short here, and had it reached it, would have been able to capture a short up in the initial resistance. This actually did not hit initial resistance until just after the 315 futures market close. So at any rate, that's one of the deals where you had to make a trading decision as to how you're going to handle it. Another way you could have handled it in terms of your trade entry to get long, right? The white zone often denotes control. It denotes control between buyers and sellers. Above a particular point, buyers are in control. Below a particular point, sellers are in control. And you can see it was actually quite well defended into the first hour. And actually at this point, there was actually no clue that we were going to have a trend day up, right? We were pretty much just in balance the first hour while Yellen was speaking. So what you'll see is multiple rejections from the white zone. Here, here, and here, right? First test, second test, third test finally breaks. We rotate up to 1849, right? And then we rotate back down to 1845. Why did this become valid? Well, technically it was an aggressive entry, right? It wasn't the biggest rotation in the world. However, right, we had just broken out. This is a structure. This is breakout, retest. This is a very basic technical pattern, right? Everyone and their brother who's read a technical indicator book or technical pattern book knows that we've broken out, we come back, we retest, and we go. And that's exactly what happened here, and that's what made it a valid entry. Also, I had stated that I was kind of shifting everything back half an hour due to Janet Yellen speaking, and basically that put my the last time that I'd really want to enter a trade easily in this 11:30 to 12 period. So that fit as well. Also, you have to recall the last time Yellen spoke, and I'm going to see if I can find this real quick, the market was straight up, right? So even if you didn't want to short, you still got an opportunity to get long, both out of this zone down here, the back of the white zone after it had been broken, the first time test back in, right? And again, I would even argue late in the day that the back of the 1849 zone, given the circumstances and the strength in the market, would have led me to say it was okay to take longs out of this area. And I can tell you that I did have coaching clients who felt the same way, right? That it was okay to take an audible. I want to look at some of the other things that would have made it okay or given us an indication that it was okay to look to the long side. So a couple of things. First of all, yesterday, late in the afternoon, right? We had this kind of this initial slight downtrend going right here that we got above on this 1848, right? On the upside of this trading, if we bring this in, let's squeeze this in a little bit so that everyone can see this. And I'm not sure I can squeeze it in enough, but I want to try to do it to see if I can't help a few people out. Is that if I simply connect the dots here, from here to here, and I look at it in a very obviously simplistic way, right? This downtrend this uptrend obviously needs to be broken to have any kind of significant downside. Also, considering the market, right? Just a simple observation of the market will tell you, look, we haven't been going back down. We've been consolidating sideways, right? After having a nice move up, we've just been working this off on a sideways manner. Okay, so there's really no downside. Excuse me, I moved that and I wasn't supposed to. There's really been no downside in this market. It has simply been day after day of up followed by consolidation, right? And we're in the exact same scenario as well. And then the last piece is late in the afternoon. If you wanted to short, the last thing that you really had to hold on to, and we're going to widen this back out again, Okay, the last thing you had to hold on to was this downtrend from the prior day, right? And you can see we've clearly, they attempted to break it and reject it. They broke back over it, backside tested it as close as they could, right? And took off. That's pretty powerful stuff, you know? And I had tweeted at the end of the day, look, there's not a whole lot of reason to stay short in this area. As a matter of fact, I'd sent out several tweets through the course of the day. Janet Yellen speaking, the market went straight up last time she spoke, okay? That fighting the market when we're above the first hour's high, this is the first hour's high right here. When we're trading above this level right here, there's no point in, when you come to the last hour, it's very rare that we get to the near the highs of the day, above the first hour's high, and then we roll over like this. This is like a 2 or 3% scenario. It's extremely rare that it happens. People obviously thought they had that. And then what's happened is they've gotten smoked. But not only that, but look at the end of almost every day has been up, right? And if you're going to try to guess when this pattern is going to break, I don't know what the previous day, how many days in a row we've had that. Let me go back and look. I'm pretty sure the day before we had a similar pattern. Last 15 minutes. Even when we were going down, the last 15 minutes were up, right? Coming into this day right here. When you have that pattern, man, fighting that, holy cow, that can be just a psychological killer. So this is what I want to leave. Oh, and then the last piece, right? Very simple on this last piece. I want to show you all this, right? It's easy. Take a trend line, the way we draw trend lines. All you have to do if you want the most basic trend line, choose the lowest point, connects to the next nearest lowest point, right? And you have the trend line that at the minimum, right, the least aggressive needs to be broken to get downside. And as you can see, it went up all day. Again, I'm not a trend line trader. You'll never see me say, hey, we're on the trend line, trade it. But I can at least see, and it gives me very clear direction which way the market's headed. And it makes it easier for me not to go in and start fighting this thing and looking for shorts that for anything more than 2 points, right? If this has got flipped, if we flip this upside down and we're going the other way, I would be just the other way. I'd be looking for shorts, and I'd be very cautious of my longs. I'd be in and out for 2 points and totally done, okay? The last thing I want to leave you with is that after 9:30, the markets have generally, on down days, been finding support and getting pushes back up between 9:30 and 11 a.m. Keep that in mind. Time frame matters. And then the last piece I want to leave you with trading is it's not finding, and what frustrates so many traders. A lot of traders find good trades. It's not just finding good trades. It is, can you find good trades, stack your account day by day, and not take large drawdowns? And that is the killer for most traders. Everyone can find a good trade, right? So how do you do that? First of all, stop following random people on Twitter. That's my first suggestion. Secondly, find a methodology you can repeat day in, day out, day in, day out, day in, day out. Even if it doesn't make you as much as you think it should, just stacking chips is all that matters. I've spoke to every kind of trader under the sun, huge traders, small traders. Their lives, their days change literally within a matter of weeks when all of a sudden they can see their P&L grinding up slowly, slowly, slowly. Their confidence builds, their fear reduces, their focus increases. And I would highly suggest that for anyone who is struggling. It's not a question of whether you can find a good trade. Everyone can find a good trade. The question is, can you find a good trade day in, day out, and avoid the pitfalls that take back to money? Because being a break-even trader sucks. It means you spent a lot of time. You basically have a hobby. You don't have a business. That's the difference. So anyways, I got to get on to get ready for today. I'm sorry this is out so late. I hope it'll help a few people. I'm going to get it loaded to the blog as quickly as possible. My name is Simon. You can reach me at tradeandperform@gmail.com. And if you have any questions, please email me. You can hit me on StockTwits or Twitter. The entire goal of this project is to help traders move from being break-even or losing traders to consistently profitable traders. So I hope that's helping a few of y'all out there. Have a great day, guys. We'll talk to you later.